What's up, traders? It's Joe here with another market update. We're going to look at the S&P, the Dow, the Nasdaq. We've got a whole bunch of stuff to go on the chart, on the whiteboard. Then we're going to head to the chart, so let's get into it.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright traders, so let's get straight into it. What do we have on the whiteboard today with the market? So we've got a lot of stuff to cover here today. We've got a lot of stuff to talk about here today in this segment here, and so let's get straight into it. We're going to look at the S&P, Dow, Nasdaq, and it has a red arrow for today. And the reason why I'm saying a red arrow, I believe more downside has come, is what I've been saying the last couple of days. But a bit more detail about what we're looking at here. Firstly, I want to say is on the daily chart, we are still hitting major areas of resistance. That's reason number one. Okay, we're hitting a lot of areas of resistance right now on the daily chart. Now, here's the thing about that: it's hitting an area of resistance, plus it's also overextended. Okay, it's overextended and it needs to have a pullback. Now it's not guaranteed to have a pullback right now. But what I do see on the charts, looking forward, is I do see that the market is likely to have a pullback based on how the markets work. And how do they work? They go through, you go through higher troughs. Can you see that? You can. So you go through, the market makes higher troughs and higher peaks. When the market steps up and runs up like this, and this move here is very overextended, then we're likely to get a pullback. That's a healthy bullish market. Now, I'm not saying we're in a bullish market, I'm not saying we're in a bearish market. I do think we're going to get the biggest crash in history over the next 12 months, and I'll talk more about that in a different video. But for now, looking at the market for now, I do see that the market has actually had a pullback. Okay, the market has had this point through here. Okay, this point through here, but the market is actually really overextended. Okay, so the market is really overextended, and there's an elastic band. It needs to pull back at least a little bit. So we're seeing this market's been overextended. So one, we're at an area of resistance. When it's at an area of resistance, we're actually still at that area where the market is really overextended. Okay. Secondly, what we actually see is we see a daily 60-minute combination with the stochastics. This is the only indicator that I use. Before I used to use the RSI, but I really like using the stochastics. And if you can use the combination, and when we get to the chart segment, you're going to see exactly what I'm talking about. When you use the combinations of stochastics together, you can really get some good bottoming action and also topping action for the short term anyway. Okay, using the daily and 60-minute. Now, the first thing I do say is that the daily, we've got the stochastics way oversold. Again, we'll see that on the chart segment. Next, we also see on the 60-minute chart, we're now getting divergence, or the market's it's making lower peaks on the making lower peaks on the 60-minute. That's actually a very weak signal. Again, when we get to the chart segment, we'll see when the market was down here, what did the stochastics do? The stochastics actually did something like this, where it was making divergence on the 60-minute. It was at the bottom stochastics was also down here. It was making divergence here, and the market picked up, and then we had a bit of a rally. Make sense? So there's the two things that we're actually seeing right now on the market. Plus, what we're also seeing is we're also seeing a reversal flag. Yes, a reversal flag, and I'll get into another video about what the flags are and stuff like that, or maybe at the end of this video. But a reversal flag looks like this, where the market runs up through there. Okay. And then instead of it going, the normal flag goes, market goes up. Okay, the market goes up, and then the market goes down. That's a continuation flag. Okay, this flag over here is where the market runs up, and it keeps running up like that. But where you have a strong buyers, and then you have these weaker buyers. Okay, strong buyers, weak sellers equals more strong buyers. Get that? Strong buyers, weaker buyers equals strong sellers to come out of the woodworks. And that's the reason why I have a red arrow there. That's the reason why I believe that we're going to get some downward movement, at least for the next couple of days. And you're going to see that on the chart segment. So anyway, guys, without further ado, let's get to the charts.
Alright traders, so let's get straight into the chart segment. And let me show you what I'm seeing on the charts itself. So you can see 3 different time frames. We've got the weekly chart down the bottom here. And the first thing I just want to bring up with the weekly chart before I get into the other charts is you can see that we're actually heading into this area of resistance right now, where we are right now. We also do have a bit of resistance up the top here. So, you know, it does look like it could actually have a bit more run to the high side. It might have another 1 or 2 up to the updates to the high side, but we're getting into a lot of resistance where that trend line is, and especially where we are right now, hitting a resistance. Plus also we're getting into a resistance through here as well too. So that's what I do see on the weekly chart, and that's what I do see on most of the other indices as well too that we'll get into. So looking at the S&P 500, and as you can see, the S&P 500 is in this area of resistance, and we're getting like this sort of bullish sort of reversal flag. I'll get into that in just a second. But you can see that first thing you do see is like this is the S&P 500, and you can see that on the daily chart, this is the daily chart to the left, this is the 60-minute to the right. You can see that we have the stochastics oversold here, getting ready to turn, okay, at an area of resistance. And now we can see also on the 60-minute chart, we're also getting this sort of divergence action happening as well too, okay? So we're getting that divergence action happening through there. And every time you make a higher high, and let me see if I can go back and find one where you make a higher high. Here we go here, okay? So you made a higher high in the price action, but look what happened with this here. It made a lower low, okay, and then the market started to come down, and so did we at least had a 1 down day through there, okay? So a 1 down day, you can see the stochastics got down there really quickly, and so on and so forth, okay? You can see this point through here, made a lower low, then made definitely another lower low, as you can see, and then the market definitely started to come off through there as well too, okay? So it's obviously just a short-term turning point as well too, guys. It's not a long-term turning point view. Okay, you can see here that we actually had sort of bullish divergence coming through here. And the powerful thing is, guys, if you go back to sort of like this point through here, so this point through here, like for me personally, I was bearish as well too. I thought the market was going to continue down. So did a lot of other people. But I was like, what was the thing to tell us that this market is likely to at least have a bit of a rally? Now, no one knows exactly how much the rally is going to be. But what was the thing? You can see, first you can see the daily stochastics was oversold here. But let me see if I can bring my... So you can see the daily stochastics was oversold down here. But then down the bottom here, you can actually see that, you can see the daily stochastics starting to make some divergence setups. And you can see that the market really started to create, it was making lower trough, lower trough, lower trough. It made a higher trough, broke through the high, and that's when things started to change. You can see how that this sort of changing momentum was the short-term change on the hourly chart that set this higher. You see that there, okay? So you can see the divergence through there. What we're getting right now, we're actually at an area of resistance. We're definitely way overextended. We're getting the stochastics oversold through here, and now look what's happening through here. We're getting that point through there, and we're getting this bullish reversal flag type action coming through there. Okay, and you can see obviously this point up through here as well too. So if we do get a close below this trend line through here, then I'll say we're likely to continue through, and the stochastics is probably going to head back down towards there, and pulling the market down with it for at least a bit of a pullback. And so that's what we just see on the S&P. On the Dow Jones, you can see the same thing as well too. Very similar as well too. Stochastics oversold. The Dow Jones is definitely into an area of really big resistance. You can see here, especially where we are right now with the Dow Jones, at this area of resistance, big resistance up here. And the same way you can see the stochastics way up the top here. It just screamed to the high side. And we're getting this sort of bullish reversal flag. We get these strong buyers and then these weak buyers. And then we got this sort of divergence on the stochastics. We're seeing that as well too. And plus what we also can see, same on the Russell as well too. The Russell we're actually getting into very close to, we're actually getting into a nicely sort of X marks the point. This trend line coming down through there. Actually the trend line is more down through, let's do this through here. Okay, so the trend line is actually down through there somewhere. So, but it's at this point where it is right now. Where this was a resistance. You can see a whole bunch of resistance and a resistance over here. It is at resistance. We're getting the same thing on this one as well too. Look at this sort of divergence we're getting. Where it gets building strength. You can see here. Look at that nice little high trough, double bottom here. But look at double bottom. But look at the stochastics there. And then wham, up it goes, breaks it, and then continues up. Okay, and you can see that little move to the high side. Came back down, gave a little higher trough, and then ran up, and that little pop there. You can see that little higher close, and then it just took off from there on that day through there, okay? And obviously on the Nasdaq as well, you can see the same thing on the Nasdaq as well. So the Nasdaq's not as clean, it's not as nice, but you can see that. Now on the Russell, I must say, guys, on the Russell, let me take everything off the screen here. On the Russell, one thing I do notice is that we're continuing to make these lower peaks and lower troughs through here. So where that's actually in the favor as well too. You can see that through there. You can also see that on the Nasdaq as well too. It's made double bottom, came up, now it's making still lower peaks, lower peaks, lower peaks, lower peaks. So we are still in a downward momentum, okay? And as long as we're getting lower peaks through here, then we are likely to see this type of action coming down through there. Okay, so that's what I just want to show you on the chart segment there, guys. You can see that's what's happening through there. You can see what we're seeing right now, guys. And all I do say, guys, is that when you're looking at the chart, you want to use the chart analysis first. Okay, so we'll get to the whiteboard and we'll talk more about price and time and or strength and weaknesses and so on and so forth. But you can see on the charts right now that everything's lining up for at least a bit of a pullback. Okay, we got massive slingshot to the high side, and I was looking at this a while ago. Okay, I'm thinking, okay, if this market's going to pull back, what about last October? Okay, we've looked at last October. What happened here? Right, we just took off. We did not pull back at all. Right, and then we just took off, and we didn't have a bullish run and then a weak buying run. Right, we just had a strong bullish run to the whole side. What do we have now? Right now we can actually see that we actually have a nice bullish run altogether, right? But we're actually starting to get on a shorter time frame this sort of weak buying action as well too. Okay, and every time you can see it, every time you see it happening, and let me see if I can bring this up on the charts here. Every time you see that sort of action happening, where you got these strong buyers up, weak buyers, you get the stochastics, and then the break down there through there, as you can see, right? And so that's what you're looking for through here. Look at this here, a lot of strong sellers, these weak sellers through here, and then boom, we broke back up as well too. So anyway, guys, that's it for me. I hope you've enjoyed this video. That's the chart segment, and let's get straight back to the whiteboard.
So, traders, did you see the chart segment? Did you see exactly what we went through? We went through a lot of different charts. We went through the stochastics, went through the dailies, and also the 60-minute charts. Can you see the correlation that I was looking at? And you see the reason why I have a red arrow on my chart on my screen right now, based on what I'm seeing there. Now, here's a bit of caveat, and it's like, here's a bit of caveat for you, okay? And the thing is this, is that I'm not saying, oh, well, I've got one foot in the bullish and one foot in the bearish. No, I'm actually bearish right now, I really am. Until we start breaking past some certain levels, then I'm going to start getting bullish. But right now, everything tells me where the market's extended, we're getting every overextended market, we're getting a bullish reversal flag, we're getting the 60-minute. All that tells me more downside to come tonight in the US stock market. Looking at the S&P, Dow, Nasdaq, and also the Russell as well, okay? So here's the things to look out for. And let me actually just do this for you. Let me take this off the screen, and I want to explain this to you, okay? Because a lot of people don't know this. When you're actually looking at the markets, okay, and when you're actually trading the markets, there's a couple of different things you need to understand, and therefore the reversal flags come into play, okay? Let me explain what I mean here. How the markets work is this: you get, if you're in a strong upward trend, you get strong buyers, weaker sellers, right? Then you get another strong buyers, weaker sellers. What is that? That's simply an upward move. Can you guys see that? You can. Alright, that's simply an uptrend, right? In a downtrend, what do we have? We have strong sellers, weaker buyers, strong sellers, weak buyers, strong sellers. Make sense? So that's what you actually get in the chart itself. But hear me out here, okay? Hear me out. When we actually go through that, and when we actually go through the process of understanding that there, we need to have a correlation that we need to have a correlation of what the market is telling us. So we had strong buyers, weak sellers, strong buyers, weak sellers. Okay, that causes an uptrend. But hang on a minute. What happens if we have strong buyers? Okay, let's go here. Go here for a minute. What happens if we have? Okay, what happens if we have strong buyers, but then suddenly we have weak buyers? Something's changed here. Can you see that? Can you see how normal upward trend is higher troughs, higher peaks, created by strong buyers, weak sellers, strong buyers, weak sellers, created by that there. Can you see that? Okay, so now we actually have this point here. Now we can see that market has strong buyers, then it went into something different. It didn't go into weak sellers, it went into weak buyers. Because this is a buying movement. Market's slowly trending up, but it's buying that move there. Make sense? Or the market's simply trending up from there. So as you can see, that the buyers and sellers, they're telling you a story there. How strong that move is telling you a story of what's likely to come. Make sense? So as we can see that this strong buyers here and then the weak sellers, strong buyers into weak buyers, that tells me that because we had strong buyers into weak buyers, now the sellers are likely to take control, you know what I mean? And at least get down to a 50% retracement before continuing up or continuing down. Makes sense? And that's obviously where you take it one day at a time, so on and so forth. Especially when you're looking at that sort of stuff on a 60-minute time frame. If you see that on the daily time frame, you can see that as well too, okay? As we said before, we went through that on the chart segment, and we went through that on a chart-by-chart basis as well too. And this is one thing that I want you to explain to you here, that's where I came up with the reversal flags, okay? Because when you have strong buyers and then weak sellers, it can sometimes create like a flag formation and then generally get a breakout and a run up, right? That's a bullish continuation flag. A bearish continuation flag is where the market runs down, then the market runs up like that, and then the market runs down, right? Strong sellers, weak buyers, strong sellers. Make sense? But what happens if we get strong sellers, strong buyers, and then the weak buying movement, like here? Something different. Now we're talking about a reversal. This looks like a bullish flag, right? But it's a bullish reversal. It's a reversal of the bullish flag. What happens if the market goes down? We have strong sellers, and then we have these weak sellers. As we just saw in the chart segment, right? We actually went through an example of this, okay? Where we actually had the strong sellers, and then we had these weaker sellers. When that happens, guess what? Boom, the market pops out. Especially when this is happening, or especially when this is happening, and this is happening, and you start to get some divergence on your stochastics. Like right now, you can see that we're getting this bullish reversal flag, okay? We're getting this bullish reversal flag right now as we speak, but what's happening with the indicators? What's happening with the stochastics? We're now getting this type of action. Makes sense? Like divergence type of actions where the markets continue up and we're getting some divergence on the stochastics, plus the daily charts is up here as well too. Boom! Down we should go. So that's the reason why, guys, that's the reason why I think what I'm thinking on the charts right now. That's why I think that we are likely to get more downside based on that analysis. And no, it's not guaranteed, and yes, you should wait for, if you're looking for an entry, woo! I just dropped my marker, doesn't matter. If you're looking for an entry, guys, okay, if you're looking for an entry, don't use, this is just a guidance of how to read the charts, and this is a guidance of what's happening in the market right now, but don't use this just to go short, okay? I don't ever do that. I use this as a guidance. I use what I'm teaching here as a guidance to place my trades, okay? It's very, very, very important for you to understand that when you're placing your trades and when you're going through the market, when you're trying to put on your trades, that you have a set criteria. For me, for this bearish reversal flag to actually show me that we're likely to break down, is I will want to see a clear break below on the 60-minute chart, a break below here. So if this was the bearish flag over here, I would want to see if the market's been going up through here, okay? Let me just do this here. Woo, there we go. Alright, cool. Let's do this, okay? Alright, so let's just do this. Let's use the black one here for a minute. If the market goes up, and then up like that, I would want to see, for a confirmation that we're likely to break down, if the market's been going up, I would want to see a market to open, come down and have a clear close below this support level, and the support level is not based on what I think, but what I'm actually seeing from the charts, and you can actually see the market actually bouncing off through here. We're seeing this support, this support, this support, this support. That to me is now saying, okay, now we actually got to close below. Now we're likely to see at least a little bit more downward movement, especially on the 60-minute chart. And now we could expect to see this type of action. Make sense? So what I'm trying to say there, guys, is that you don't want to just go short based on what I'm saying here, because guess what also can happen, right? You also can go like this. And go boom, 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 right? We know what the market's like right now, especially when we're getting into the crash season right now. Makes sense? So, anyway guys, that's the analysis that I see on the charts. That's what I see on the charts. I hope you've enjoyed this video. This is a strong market update to not only teach you what's happening right now, but take these tools analysis and put it to your trading system, put it to the way you look at the markets. Because as you can see, right, go back and look at where the stochastics was, especially using my settings that you see on the charts. Go back and use that and see exactly what was happening on your time, you know, or when the market was going, and look at the way that the market works, okay? See the stochastics, see the highs, see the lows, and go to the 60-minute chart as well too, and see what was happening with that. And as you can see, right, sometimes with my stochastics, I use an overlay stochastic, so I use two stochastics sometimes as well too, especially on the 60-minute chart, getting that divergence where you get the slower down, you get the faster moving up, boom, massive, massive, massive combination. So anyway guys, that's it for me. When you are placing a trade, please place a trade that is 100% congruent with the way that you trade, okay? Because it's so important. I have analysis here, okay? I have analysis here, and I have analysis based on what I think the market's going to do. But when I'm trading my stocks and when I'm getting in and getting out of the market, I have a set crucial criteria to get in. It's so important to make sure you're following that criteria. And ultimately, when you're trading, you need to be in that calm, collected state so you're making less mistakes. Anyway, guys, if you've enjoyed this video, click on the image or whatever is on here, head on down to my website to get more free education to help you out even more. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.